the company is going to offer you what's called Cobra coverage. And Cobra is simply an acronym for the Consolidated Omnibus Reconciliation Act. It's a mouthful. And the purpose of Cobra and the mandate behind it is, among other things, it requires that the employer must continue to make insurance available to employees who have left their company for at least an 18-month period. The employer is not required to pay for it, and the employee is not required to use it, but the company must make it available if the former employee wants to have it. So while the company is still required to make the plan available, as I said, they are under no obligation to pay for any of the coverage. The obvious result of that is a higher bill for the former employee. And oftentimes people kind of go into culture shock when they get their first bill, because they're used to their bill being, $25 a month, and now it's $800. So this is one of the considerations in making the decision of whether or not to use the plans. Others would be if the level of insurance they receive under that plan is what the employee and their family continue to desire. They may want a different level of coverage that is no longer offered on that plan. So options that are available to you if you don't wish to use the Cobra benefits would be any of the plans that I outlined previously. Even the ACA plans would be an option, since losing coverage at work would allow for a special enrollment period for you for 60 days. And if you qualified for the premium tax credit, that would be applicable at that time as well. So all of those possible options would provide you with the type of coverage that is the best choice for you and your family. So when making that decision, understand the cost and the coverages that you're going to get to make the best choice for yourself as to whether or not to continue your Cobra benefits. Have a great